Hello, my name is Hussein and I'm Forex Optimum broker financial analyst. I'm back again to bring you all some of the updates in the financial markets. Well, let's talk about it first of all. The last trading week in May started off with the statements of the Federal Reserve not to pay too much attention to inflation. The Fed has published a long list of reasons of temporary nature of inflation spike to calm down the markets. The Fed considers the rise in prices due to the effect of low base that will soon fade along with large social benefits program that has stimulated emergency spending. US monetary regulator fondly believed US consumers would not buy a second refrigerator or a mobile phone or even a car despite record level of savings. According to the Fed statements, US consumers traditionally have low inflation expectations, and together with high unemployment levels, it would lower inflation. Bank of America published its own research claiming that higher inflation is already priced in by the market. Such a bold conclusion BOFA made after a survey of many managers that have 500 billion under management. All of them consider high inflation as a major threat at the moment. And for this reason, BOFA analysts suggest this risk is already absorbed by the market. We may have endless confidence to the Fed and BOFA, but the macroeconomic reality unexpectedly suggests that increasing monetary supply would have only temporary positive effect on economic growth within not more than a year. After that, growth returns to normal, but on the background of high inflation and higher inflation expectations. You may consider such academic dispute far from market realities, but it is not. It may propel wrong ideas that would result in sway market correction afterwards. So far, market supports the Fed and BOFA points to view as a view saw rising high-tech stock on Monday, and Nasdaq 100 gained more than 1.5%, while the S&P 500 broad market index rose by around 1%. That could not be logical behavior of investors considering correction signals coming from cryptocurrencies, debt markets, and crude market. Buying of a risky assets may not be a wise strategy at the moment, but the Fed may look extremely conclusively, especially when it bumps billions of dollars in liquidity at zero interest to the market. Technically, the situation for the stock market is not that optimistic as S&P 500 index is still in a correction zone. However, it is already above resistance level at 4,170 points. If it breaks above 4,230 points, it would return to an upside trend with the next target somewhere around 4,250. In case the correction scenario would remain on the table, downside targets are at 40, 60 and 3,930 points. Crude prices are trying to climb higher on possible storm in Gulf of Mexico and potential halt on the Iranian nuclear deal after the negotiation deadline set by Iran expired on Sunday. May 23rd, Brent crude prices returned to a resistance level of $68.40 and are looking to hit $69.60 per barrel. With sell position with targets at $67 per barrel would be an interesting opportunity. If US-Iranian negotiations would resume this week, crude prices may dive even further down. Gold prices have consolidated in the range of 1870 to 1890 per ounce. The US 10 years Treasury's yield fell to 1.60% and may push gold prices to $1,900 per ounce. However, we should keep in mind that Israel and Palestine may start ceasefire negotiations any moment. So any position in gold would be too risky at this moment. The greenback, the king, the dollar is under pressure this week despite strong macroeconomic fundamentals. Euro USD is not far from 1.21850 strong resistance level, and that may mean a possible decline to 1.2050 at 1.1940 support levels. The GBP USD, the cable has all chances to reach 1.4250, where it would be interesting to sell with targets at 1.4120 and 1.4010. The USD JPY is already way below the support level of 109.50. That may point to its upside potential, but also fears to overgrowth, further growth in risky assets. So, purchases are looking good at the moment, but they should be placed with caution. Thank you very much for listening, guys. Have a great day ahead and have a profitable trading week. Bye.